Welcome to another KE Report webinar. I'm your host, Corey Fleck. This webinar is being produced in conjunction with Focus Communications. In this KE Report webinar, we are featuring Kuya Silver, traded on the CSE under the symbol KUYA and on the OTCQB under the symbol KUYAF. I am chatting with the president and CEO, David Stein. Now, David will be walking us through this presentation that you all see on the screen. We are going to be focusing a lot on that initial resource estimate at the Bethania project, as well as the growth opportunities that the company sees in terms of exploration in and around where the company has drilled and even some new targets. Now, you are all able to ask some questions. We've already received a couple questions sent in prior to starting this webinar. There is a chat and question and answer function within the program. Please just use that to relay your questions over to me, and I will be interjecting questions as David moves through this presentation. David, I'm not going to take up any more of this time. Let's get started with the presentation, and I first and foremost just want to thank you for taking some time to walk us all through this update.
Okay, thanks, Corey, and yeah. This is not going to be our usual corporate presentation, although we do borrow some slides from it. This is really meant to be an update focusing on Bethania. We had our mineral resource estimate first ever a few weeks ago, and so that was really the catalyst that we wanted to give people the forum to get a full update and ask questions. And then, as it's turned out, we've had some pretty material news just leading up to this webinar, including the construction license or authorization that we announced a few days ago, and then some really exciting surface sampling results as well. That's we can talk about later as well. So with that being said, so it's very going to be a very kind of exploration focused presentation, but this is a big part of our story, so we're very, very excited about it. Let's move on. We do have the disclosure here. Please review this, not only in terms of forward-looking statements, but also covers the resource estimate assumptions and disclosure. So please take a look at that. You can get the corporate presentation with the exact same disclosure on our website at any time. So go ahead and check that out when you have a bit more time. All right, well, so let's start here. This is our big overview slide. Some of you have seen this before, but worth pointing out, just in case there's anybody new here, new to the story, that our flagship asset is the Bethania silver mine in Peru, and we've been involved in this asset for several years now, going back to when we were a private company. But prior to our involvement, it was a privately run mine that toll milled this high grade polymetallic or silver polymetallic ore. And what toll milling means is you take the ore itself, you mine it, and then you process it somewhere else at someone else's mill. And you do that, of course. There's a lot of additional costs that come with doing that, including extra trucking costs because you're trucking ore instead of a finished product or a semi-finished product. And you're also incurring costs to basically pay for the milling, which we call toll milling costs or toll milling fees. So we saw the opportunity, number one, build our own mill at site. That would require some engineering, permitting, design, but we're good at that. So we decided we'll do that, and we could lower costs and at the same time factor in an expansion of the mine. So we've been working on that, sort of steadily for the past few years. And then on top of that, we saw the potential for huge exploration upside at the Bethania area. Very little, sort of modern exploration has been done. The previous owners were more focused on production. So a lot was known about a few of the veins that they're producing from, but very little else. And we've been really, in the last year and a half, we've been able to add hugely to the knowledge of what's there, and also increase our land package around the mine, which is going to give us even more growth opportunities going forward. So with that, let me move on to
David, real quick. How much of the prior work that was done, understanding that it only was done on a couple of veins, have you guys utilized in terms of getting the resource and even targeting for other veins?
Well, they had done some comprehensive underground sampling of 6 of the veins. Now we now have 18 veins in our resource estimate, but those are the difference there is ones that we've intersected through drilling. But anyway, there was a lot of underground sampling done. Very good work done in that front. They never drilled. So that was the missing piece that we basically completed last year. And so that's what we were working off of when we started the project. Oh, sorry, what was the other part of your question, Corey?
How it helps to target some of these other veins. But we also had another question that came in that maybe you can address. What time period was this data, let's say, made or worked on?
It basically was right up until 2016 and probably going back to maybe 2011 or 12 by my memory. So fairly recent.
Okay. We can move on then. We'll get into the exploration coming up. Cool.
Okay. Before we do that, let's not forget our corporate structure, capital structure. So you got 45 million shares outstanding. Big management ownership, including myself. I'm a big part of that 22%. And we've got our advisory team, including basically some people who helped us start the company in Peru and elsewhere, and great institutional shareholders. So thank you to anyone on the line who's one of our shareholders, and we're looking to make you very happy this year. All right, our strategy here is really to focus, at least for the time being, on these high grade underground mining situations, which are really ideal for starting a company in the silver business in particular. Peru and Mexico have a lot of silver production historically. Mexico #1, Peru #2, and most of this production comes from high grade vein mines, much like Bethania. But there's obviously dozens, if not hundreds, of these mines between the two countries, and then you've obviously got them in other places as well. So it's a fairly kind of common deposit type that we can utilize. We don't have to reinvent the wheel or do any strange metallurgy or anything like that. It's fairly easy to get started. So that's really what the business plan has been, to find these undercapitalized mines, and Bethania being the first one. And by providing expertise and capital, which we can do, we can expand production, we can lower costs, and we can increase the reserves and resources through exploration. And so that's the process that we're doing with Bethania. Maybe in the future we'll do it with other projects as well. It's the same kind of process and business strategy that First Majestic did in its early days, in the early to mid 2000s. Pan American in the mid 90s, actually, when they started. Their first mine, by the way, was Curavilca, which is in Peru, just north of us. So there's a good pedigree to what we're doing here. And the other really big advantage to these high grade vein projects is that they're low risk. Exploration risk, you follow the veins. And typically you find more mineralization along strike and at depth, of course. Lower capex because they're just smaller tonnage projects, so they don't require as much capital and infrastructure. They're less controversial on a CSR environmental because, again, they're smaller environmental footprint compared to, let's say, a big open pit. So these are really ideal for a company like ours to get started.
Okay, thank you.
Just a reminder where we're located is here where the red Bethania ore cart is. We're about 170 kilometers from Lima, flying. We don't have an airstrip at our mine, so that's kind of irrelevant, but interesting. You can fly to Huancayo here, the city of 500,000 people, that is about a 3-hour drive away from the mine. So We are, Huancayo, I would characterize it as kind of the Sudbury of the Central Andes. It's a lot of mining services and people there available, and they're sort of servicing all these mines in the area with, several hundred kilometers of silver, lead, zinc, plus or minus gold mines running, in this area here and further to the south. So we're in a great area in central Peru, mining country, and we really like where we are.
Okay.
Okay. With Kuya, I think a big advantage that we have over, let's say other, companies in a similar market cap space to where we are is the fact that we've got really two different ways that we can create value for our shareholders or increase value for our shareholders. And that is exploration, which, every junior company is drilling something or exploring something. So that's fine. And we're doing it too, and we're getting great results. We're really, really excited about that. And we'll talk a lot about that today, but not to be forgotten, we also are developing a mine, and as the Bethania mine and restarting it. And as we get closer and closer to cash flow there and keep de-risking that production scenario, that gets more and more valuable. So
what's the time frame on this kind of stuff? Can you make sure that you cover those aspects too, please? Yeah, sure.
I mean, we're looking at basically, if we look at the yellow development track here, we got our EIA approval in late 2020. Then since then, we've been working on our construction approval. We got that. It's actually called a construction authorization. We got that. We announced that on Monday, so a couple days ago. So that's a major achievement, and that allows us to start building the mill. So with that, we've still, in terms of things that we still need to do to fully implement the expansion plan, we need to do some additional underground development, which we will do over the rest of this year. We will finish a PEA, so that's very, very late stages on that. That should be complete fairly soon. And then, plant construction, it's a short time frame because it is I don't like using the word small, but it's a very compact plant that we've designed, 350 tons per day. It's suitable for the high grade mine that we're building here. And but the advantage is we can build that over months instead of years. So we can build that fairly quickly and get into commissioning. So this whole track, we certainly could see some production, some ore going through the mill by, the end of this year, if not early in 2023.
Okay, so quite soon. Just a quick question. The thought behind going through a PEA and then right into construction, commissioning, and then production. Can you give us some more, insights on what some of the risks might be that you guys are aware of making that quick of a move? Well,
really the PEA is somewhat of an independent track to what we're doing. We couldn't get our construction authorization without detailed engineering designs. So really internally, we're more advanced than that, but we do want to. But that being said, there is some value to a PEA in the sense that it incorporates the whole project into an economic model that we've never been able to report to the market before, and look at some scenarios in terms of the first few years of production. So I think it is a good thing in terms of market communication. But I mean, we're already progressing well past that internally in terms of the mine development, and so I wouldn't look at the PEA as being necessarily a decision document for us. I would look at it more as a document to provide independently qualified information to the market.
Okay, thanks. Now talking about exploration, let's move on to that because I know that's important too.
Yeah, and I think we're going to talk about all this stuff on the Bethania track today. So maybe we can just move to the next slide. And this is sort of the last slide on the production side. But again, worth mentioning that by building the plant, we're gonna have some significant cost savings over the toll milling operation that was there previous to us. And that comes from the fact that we don't have to pay toll milling fees. We don't have to truck the ore around. We only have to truck concentrate, and that is literally a fraction of the amount of tons. So, and then we have a bigger scale because we're going to be producing just more tonnage than the previous owners did as well. So we have no royalties or streams on the project, worth mentioning, because I know a lot of people do these days. So this is really set up to be a very low cost operation and very, very profitable. And we're obviously very, very excited about that. That can open us up to even greater growth. I mean, I think we're doing well. We have our Bethania project on this black rectangle here.
David, we're really
and the black rectangle is the mining concession. So the Bethania.
Okay, David, can you hear us? Okay, we had a little technical issue there.
I don't know what
Are you hearing me all right? Okay,
yes,
all right, continue on. If you could start this slide over because you really started cutting out on that, please.
Yeah, no problem. So, let's, so we're looking at the whole Bethania land package here. The mine concession is this black rectangle here with the star. And the star is roughly approximately where the mine is. And you can see that, well, basically, if you were looking at Kuya, let's say 2 years ago, this was pretty much all we had. We've been, gradually adding to our land package over the years. And importantly, in the last year, we added the Carlita Project over here. And then in November, we added all this pink area around here, which importantly gives us the north and the south extent of the middle of the Bethania zone where the hilltop zone is. So we'll talk about that a little later, but we've got quite a few veins that are striking north-south onto this other property. And so it's very strategic for us to get a hold of this and this area, not to mention the rest of this pink area. So we're very, very excited about that. I think this, again, over the past, year or so, we've transformed the Bethania story from a very localized mine exploration project to a district. And that's, I think, that's a game changer for us. The Carlita Project has a lot of similarities to Bethania. It's a little earlier stage, but we see a lot of similarities, and we'll be doing more work on there later this year as the year goes on.
Okay, guys, sorry about that voice quality. Hopefully it will stay strong. I'm trying to look into what the problem might be, so we are working on that. David, a couple quick questions on that prior slide 8, because it did kind of cut out a little bit there. A lot of people are wondering what the approximate cost might be when it comes to building out what you need to actually start production. Any insights on what that CapEx will look like and how long the build will take?
So I mean, we don't have any sort of official numbers on that, and that is one of the things that will come out in the PEA. But I mean, internally, we're planning for something that would be, let's say in the middle of a $10 to $20 million range.
Okay, we're not talking hundreds of millions, though.
No, exactly. I mean, and likely to the lower end of that. But again, just to give people an idea, this is a relatively low cost project, quick to build, and that's a huge advantage for us.
Okay, that's perfect. And then on to this other slide here. I'll just move it along there. What other mines are close to your guys' land package, and what's access like in terms of road access?
So road access is good. You can actually drive right to Bethania. The roads get a little rough in the last I don't know 100 kilometers or so, I guess. But definitely no problem with a truck. And keeping in mind, we used to haul ore in big dump trucks from the mine and drive them 50, 100, 200 kilometers away to other mines to have the ore processed. So there's decent roads coming in basically right to site. And the other question was, what was it?
That is any other mines in the area.
Oh, mines nearby. Yeah. Fair enough. Yeah. There are mines in the area. The closest, so there's actually a gold heap leach mine, I guess, a little further north, just off this map. That's run by a company called Minera IRL. So that would be the closest mine, and it's a little odd because it's purely a gold mine. So geologically or mineralogically very different from our project. The closest kind of similar polymetallic mine to ours that would be of a publicly traded company that people would know would be Sierra Metals. I believe it's about maybe 50-ish or 40-ish kilometers to the north of us. And I did have that on that earlier map that showed Lima and Huancayo. So that's pretty close to us. But yeah, there's we're in a belt where there's public companies like Trevally and Glencore, who have mines, and then there's lots of other smaller private operations as well.
Okay, thank you. We can move on now.
Okay, here's our resource estimate that we put out earlier this month, and the numbers here, basically on the silver equivalent, just under 6 million ounces indicated and 8 million inferred. So that's just under 14 million equivalent, or 10 million just pure silver. Adding the indicated and the inferred together. So that's a great starting point for us. We're very, very happy with the resource. I guess in terms of some of the interesting observations that came out of modeling the various veins and the incorporating the drill program that we did last year was that actually a lot of the mineralization in the resource is above the main mine at the main mine production level of 4670. So between most of the indicated and quite a bit of the inferred. So between the indicated and inferred, probably about half the resource is above that level and half of it's below. And we certainly were expecting more of the resource to be located at depth, because obviously that's never been mined before and it's completely open. And we were pleasantly surprised with how much mineralization we were able to sort of collect in the upper levels. That's stuff that we can look at going back after. Should be cheaper to produce at those shallower levels. So we're very, very interested to see what we can do there. Definitely, that was some good news.
Did that change your strategy at all, David, moving forward, in terms of if you weren't expecting that many ounces to be above historical production, is there more to be found then?
Well, I think it has changed our exploration model. I think from a production point of view, we're still going to focus on those more known areas and near the existing mine workings for now, because that the mine workings are already there, so they're sort of ready to produce. But yeah, as the years go on, I think we'll obviously add some of those new veins into our production schedule. But getting back to the exploration, what we're seeing is the main veins seem to be kind of branching up as you go shallower. So so there's definitely we could be missing some of those veins as we go further to the surface. And so more shallow drilling is actually, something that we should probably look at doing in addition to drilling deeper, which is a big priority for us as well. And we will talk about, where our priorities lie soon. But as you can see from the surface sampling program that we are just talking about, or we just announced today, we're actually still finding new veins right at surface, and not just in the hilltop zone, but actually right in the mine area. So we are, there's clearly more to be discovered in the immediate mine area, and that's quite exciting, and that's something we want to take advantage of.
Okay, yeah, that makes sense. One other thing that stands out here is that you guys were able to produce this resource estimate with only 5,000 meters of diamond drilling. How were you able to get to a resource so quickly with such limited amount of drilling?
That really comes down to how shallow the resource or the veins are, the mineralization in our case. I think when you look at some other companies doing, 30,000, 50,000, 100,000 meters of drilling, chances are they're drilling deeper holes, deep holes. And, as you can imagine, if you're trying to hit something that's 500 meters below surface and you've basically got to drill 500 meters of nothing to get there, that costs $50,000 each pop. Obviously if the prize is worth it, that's fine. That's lots of companies do that, but we are lucky. We don't need to do that. Even when we go deeper in our next drill program, we'll be doing some drilling, or I expect we'll be doing some drilling from underground. So that essentially, that reduces the amount of meterage we have to drill to get to the same target as compared to drilling from surface. So that's a nice, bonus is that it's not going to cost us as much to essentially accomplish the same thing as someone else, as another company would.
Okay. One other question that came in on this resource asked about recovery rates. Have you guys done any work on recoveries?
Like metal recoveries?
Yes.
Yeah, we're fortunate because we've got detailed metallurgical work from the production that was going on up until 2016. So using that as a baseline, we've been able to, kind of design what we think we can do with having our own equipment, having access to our own equipment. So we are expecting higher recoveries with really all the metals. But that being said, they weren't actually all that bad in the previous owners. The silver and the lead recoveries were over 90%, and those are the two most important metals by far. Silver being the most important, representing 70-ish% of our revenue, and then lead, and then there's definitely opportunities to improve the zinc and the gold and the copper though with our own equipment.
Okay, perfect. Thanks, David. Maybe let's move on.
Okay. Here is, here's the block model as sort of a snapshot of the 3D model. And you can see here, this is the whole Bethania Hill where our, mine is, and the property and in the property boundaries in pink. And you can see the mined out areas here. Now, keep in mind that this is actually, again, our resource is actually 18 different veins that are sort of stacked together. And you're looking at all 18 of them here, essentially. So some of them are mined more than others, like the Doce De Mayo vein was mined quite heavily, but it's still open at depth, whereas some of the other veins were not mined at all. And so you can kind of see, you can see here that relatively little of the block model is below the mine workings at the moment. So there's a lot of potential at depth there. And, we also haven't gone that far along strike as well. And actually, maybe I can interject at this point and show you the block model that I've got on my other screen.
Absolutely. Sure. I'll give you a couple insights on some of the questions that also have come in here. A lot of people are wondering how deep you might expect this resource to go and what your, guess might be in terms of grade, whether it increases or decreases the deeper you get. Also, what that strike component looks like closer to surface. So hopefully that block model can cover that.
Okay, yeah. So here's that same block model, but just it's in with the colors in here. And I know the resolution is not awesome on this, but because it's I don't have a supercomputer for doing resource modeling, but but anyway, we'll make do with it. So let's start with the plan view, okay, of the this is the whole mine concession. And you can see that the actual resource shapes, they only go for about a third of the mine property, east to west, and some of the veins even less than that. So there's still a lot of potential along strike here. And then if we turn it around and we start looking at it at depth here, then actually let's just look to the north. There we go. And again, this is pretty much the same view that I was showing you before. You can see the mine workings. So to answer your question about the depth potential, Corey, so this is actually the lowest point in the resource in any of the veins right here where I'm pointing. And so that would be in the Doce De Mayo vein, 230 meters below surface. The other veins are all shallower than that in terms of the resource model. These veins, similar to our project, definitely can go, 500 meters, which would be more than a double from here. Some of them even deeper than that. Kiravilka, actually, that Pan American mine I mentioned earlier, they don't own it anymore, but they're still mining at a kilometer below surface. So these vein systems, these hydrothermal vein systems, can definitely go deeper and deep, very, very deep. And what's, I think very encouraging about our project is that we seem to be still very shallow in the system. We're not seeing any metal zonation yet. We're still getting, our high grade zones at depth here, dipping or basically plunging vertically. So here's one of those high grade zones. There's another one over here.
What colors are the high grade zones? We are getting a couple questions regarding colors and what they mean.
Yeah, good question. And actually, when I go back to the presentation, it will be even clearer. But yeah, so the pink is the highest grade. Then you go red, yellow, and then the green and blue would be the lower grade.
Okay.
So actually, let's go back to the presentation, because then we can look at some more slides that show the grade.
Absolutely. Overall size too.
Like this one.
What is this kilometer wise? It's hard to see that scale down there.
Yeah, fair point. Okay, so so the east to west here, so the strike length of Doce De Mayo would be about 600 meters.
Okay.
And the property goes for 1.5 kilometers east to west. And then, that's just the mine concession. Then we've got all that land around it, but just the mine concession we're talking about. And then again, from the hill here down to the bottom of the resource is, 230 meters in this vein, and it's 200 in Espanola. It's less than the other veins.
Okay. Now we're seeing a lot of high grade close to surface here. I realize that this is a vein system, but could you potentially think about an open pit operation? Is the silver disseminated enough?
I mean, for now, no, we're not. We don't want to change our sort of our business plan this close to going into production. Yeah. But it's definitely something we could look at in the future. I don't think we'd completely transition it to an open pit, but there's definitely zones where you do get clusters of veins that are close enough together that you might potentially have small pits that could feed into the mill. We may have an overhead view later that shows that a bit clearer. But definitely there could be opportunities for that, to essentially add some tonnage to the mine.
Okay, thank you.
Okay, so this is Doce De Mayo. This is had the most production. And then let me just take a quick step back here. In terms of the 18 veins that we've sort of identified as discrete, mineralized zones, we subdivide those into 3 vein systems, and the vein systems are essentially all related to bigger mineralizing structures. So Doce De Mayo is both a vein and a vein system. But this is showing you the vein system, I believe. You can see some production here, and there actually is more production over here, but it's covered by another vein that hasn't seen any production, so it's sort of overprinting it. So there's actually multiple veins in this diagram, but nevertheless, this will be a big, still a big producer for us going forward. You can see the pink is our higher grade ore, and it's open at depth. And whether you look, no matter which vein system you look at, the high grade zones seem to plunge vertically, more or less. And you'll see that when I go to the next one. Here's Espanola. So Espanola is the other big mineralized vein system further to the north. This one did not see quite as much production, and they didn't mine as deeply as Doce De Mayo back prior to 2016. But nevertheless, actually this ended up being our biggest chunk of the resource in this Espanola vein system. So it was about, from memory, just under half of the resource is in the Espanola vein system. So the Espanola vein itself, and then a bunch of the veins that are basically close to it that we think are all part of the same system. And you can see the high grade zones again plunging at depth there.
Okay.
And then, Victoria. So Victoria is another one that we're very bullish on. We thought it was sort of more of a minor vein, but again, as we've drilled it and studied it more, we've realized that this actually deserves to be sort of classified as its own distinct vein system. And it actually carries some of the highest grades in the mine. So we really like this. I think it's got a lot more potential, and we have not drilled Victoria as much as the other veins. As you can see, there's not as much strike length to it, and it's also shallower.
What grades are you talking about when you say that's the highest grade of the veins or vein systems?
I think the average grades are actually in the press release, but I think, just from memory, I don't have all those numbers. We did subdivide it by level, and we subdivided it by vein system. But from memory, I think the grades in Victoria vein were about 100 grams per ton higher than the other two.
Okay, thank you. People, I guess, can read more into that in the news release.
Yeah, it's in the press release.
Yep.
Okay, so where are we going with this? So all of those veins that I just showed you are basically from this area over here. So this is the Bethania main zone, we call it. And there are 20 veins, but 2 of them didn't make it into the resource. So it was 18 in the resource, but we did identify a few other ones in drilling that are we'll call them exploration targets for now. And then, you can see some of our drilling highlights here. This is all still open at depth, and this is where this will be a big focus for us this year, is to keep making this bigger at depth, because that's the low-hanging fruit. That being said, it's looking very, very good over here. This is the hilltop zone, where we had some spectacular surface samples earlier in 2021. And then we have just, added to that with some more results recently, actually just announced today. So we're very, very excited about this and this area here. There was some historical mining that happened here, not in our resource. Actually, don't know that much about it, but we can see the adits in the side of the hill. So we know there was some mining here in the past, but definitely we're seeing vein mineralization right at surface here, and not just one vein, it's multiple veins. We've got actually at least 6 identified so far, and I'll show you more on that later.
David, how quickly can you, with these early on discoveries of these different vein systems, how quickly can you bring them into a resource? How quickly can you add them to a mine plan?
Well, resource is really about drilling. So I think after the next, drill program, we will focus a lot more of our attention on this area than we've done ever in the past. And I think we should be able to get some resources. They might only be shallow at first, but that could still be millions of ounces. Even if we only had 100 meters of depth on these veins here, that could be, as I said, that could be millions of ounces added to our resource. So we'll drill that later this year and see what happens, but it's looking very good. And then in terms of putting it into a mine plan, we don't need to do that right away. We've got many, many years of mining here. And also, again, I expect that we'll be focusing more on the depth extension here as we go to years 3, 4, 5 and beyond. That being said, in the grand scheme of things, this is all likely going to be one vein system. And we just do not have the data yet to connect it all together, but we will get there. And I could see there being an adit going in from this side, or maybe more than one, and basically meeting up with this infrastructure over here underground. There's a lot of good mining engineering reasons why we'd want to do that as well. Increases access, flexibility for mining, it's safety, good, for safety, ventilation. So there are lots of good reasons to do that, but obviously we need the resources to justify that. So that's something we'll be working on.
Okay, thank you. We can move on.
Okay, and again, this should be no surprise what our targets are. But again, the depth extension is priority number 1. The hilltop zone is priority number 2. Connecting them is priority number 3. And then we've got the eastern extension. We actually know we've got a showing over here, just about, just a little off of our property, but we still have this mineral claim to the east here. We acquired that. So it's looking like there could be, much more extension to the east, and that'll be something that we look at as soon as we can get over there later this year.
Okay, perfect. We had a couple questions on priority of target, so that solves that one.
Okay. All right. Let's talk about our surface sampling results that we announced today. And I'm going to show the gold and the silver maps on this one. So this is the gold first. And they're quite similar, but there are some differences that are worth noting. First of all, the new Carmen vein that we announced today. So that's located right here, along here. You can see where all the dots are.
David, we cannot see your mouse, so I've turned on the whiteboard here for you. Hopefully that helps.
I actually did not realize
you can draw on this now.
Okay, so the Carmen vein is here. You can see where all those dots are, and it is dipping to the north towards the Victoria vein. So, and you can see we've written the veins on here, so hopefully everybody can read that. And so this vein, first of all, it's not in our resource. It's a brand new discovery. And it's very close to the mine working. So how did we miss it? Well, we were drilling at depth this way. We were kind of drilling this way. And, I guess we didn't drill far enough. So we didn't hit this vein at depth, but it is at least at surface, it's pretty much only gold, which is very different than the other veins that we have discovered. or included in the resource. So we got up to 6 grams per ton in one sample over this, basically 300 meters. This line I drew, and there's samples all the way across. And then we have another gold-rich vein over here. Shouldn't be a circle, but it's basically this one trending that way. Anyway, and this is our property now, so this is fine. This is good. So if this all connects together, that's 800 meters. We don't know yet, but that's obviously quite interesting that there's a gold only vein over here, and then there's a gold only vein over here. That's quite unusual or suspicious that it might be the same thing, I should say. So we got lots of like 1, 2 gram, 4 grams, 6 grams was the highest. So very, very, very interesting in terms of a new discovery for us. And then, the other things, actually, I will clear this and then
I gotcha.
Go to the next slide.
This is the first time that we are hearing about gold on the project then. So you even mentioned it is a bit different to have these gold veins standing out there. What's your big picture assessment of the potential tying the gold veins into silver veins, or what is happening here in your eyes?
Well, so we don't know. I'm a geologist by background, so we're having a lot of fun, actually, myself and the real geologists that we have, hypothesizing what's going on here. But basically, it's probably one of two options. One is that it could be a metal zonation kind of situation where it will sort of become a more traditional Bethania style vein at depth, and just happens to be for some reason just rich in gold right at surface at the shallowest levels. So that's one possibility. The other, maybe more likely scenario, is that as the Bethania vein system was being deposited, it wasn't obviously deposited all at the same time. It was probably deposited over several stages, and potentially the gold stage was the last gasp of mineralizing fluid. So after the silver and then the lead, zinc, copper was already in there in these cracks, there was a pulse at the very end of gold, basically gold only, because the other minerals were already solidified, already deposited by then. So that's another possibility. And in which case we might just find a few of these gold veins kicking around. I don't think it dramatically changes the model here, but it's a nice bonus. We like gold too, and we so there's nothing wrong with getting 2 grams, 4 grams, 6 grams gold when we're exploring for our silver veins. Yep.
Okay, we can move on then. Thank you.
Okay, and here's the silver assays for those same samples. And on this one, I'll just point out, I guess, a couple of zones that we're kind of excited about. I mean, right here, this, it's a bunch of samples and they're very close together, but we got some spectacular numbers here. Over 2,000 grams per ton was the highest. And, so this could be sort of a branch related to the Doce De Mayo vein system. We're not sure yet. We need to do more work on it, but obviously nice to get those kinds of veins grades right at surface. We also seem to be getting some branching of the Doce De Mayo system going kind of this way. And we got some great results here, several that are over 1,000 grams per ton. So this is the Doce De Mayo vein system, which is the biggest producer, but does seem to keep sort of giving us little gifts of additional branches and mineralization and stuff that we need to get a handle on and see if we can bring them into the resource. The other thing, and it's a little off the map here, but Mercedes is it's one of the veins in the hilltop zone that we didn't talk a lot about previously, but we are finding mineralization that goes right to basically the property boundary here. And now that we have this land to the north here, I'll just put an X on it. We've got, and this is ours as well. now we can continue following these veins further to the north. And actually, in the case of Mercedes, the best results in this whole 300 meters that we sampled were actually right at the northern boundary. So we're very excited to see what we find on the other side of this blue line. But now that we control this land package, we can do a lot more exploration, and not only Mercedes, but you can see it does look like these other veins are striking in that direction, both to the north and the south. So that seems to be something that's happening in the hilltop zone that we don't really see over here, is this northwest southeast striking veins, but they otherwise look very identical to Bethania style veins with the same silver, lead, zinc, plus or minus gold, copper that we've come to expect over here.
Okay, thanks, David. I think we can move on. We'll wrap this up here shortly.
Okay. All right. So we'll just, again, just to remind people, we do have the Carmelita Project. We haven't done a lot of work on it yet. We will be doing work on it this year. And, with obviously the idea of demonstrating, some serious value here. This has all the footprints of another Bethania, but it was earlier stage. Previous guys were mining it, very, very small scale, though, artisanal kind of scale. But, pulling out very similar material to what we have at Bethania. So lots of the veins are on surface here as well. We can go and start sampling, very soon, and then, think about drilling it as well. So we're very, very bullish on that. And you'll hear more news about Carmelita over the course of this year.
Got it. Okay.
Okay, CSR, very important, and even in exploration, we're working very closely with the local community. In our case, we only have one community that's involved in the project, at least at the present time, called the Proche community. So their surface rights cover our whole basically area where we're exploring and including the Bethania mine and Carmelita right now. And they've been very, very great partners for us. We've been the previous owners were, working with them prior to our involvement. We've been able to sort of pick up that relationship over the past few years. They were involved in the EIA and helping us get that approved. And they've been involved as we've been doing work on the project, exploration work last year, drilling, etc. So it's been a very good, two-way relationship, and we look forward to continuing that as we move the project forward.
I guess kind of tying into social responsibility, David, we have gotten a number of questions asking about the new government in Peru, if this is going to impact any of your guys' build out, any of your guys' production. We don't need to take it here, but we do need to address it before we wrap this up.
Yeah, no problem. Look, at the end of the day, the new government is really committed and to the sort of the local people in the highlands of the Andes in particular, including people like our community, as well as the other communities and towns and cities in the area. And sort of, I think, I guess dealing with perhaps a perceived wealth inequality that's been happening in Peru, where they've been being left behind, the people that live in Lima and some of the big cities on the coast. And so I think as long as we really stay true to, to really, adding value to their community, their opportunities for work and education, and benefits for, for being there on their land. I think we can manage with the new government and future governments. I mean, we're going to be there for a long time. So, I think there are dozens, if not hundreds, of mines in Peru of all sorts of commodities and all sizes and shapes and sizes. And so, we're not a high profile mine in Peru, and we like it that way. I think that also is a way to manage risk, manage geopolitical risk. But nevertheless, we having a great relationship with the local community like we do, it helps. It helps a lot. And I think that's sort of how we manage that.
Okay, thank you for addressing that. Let's move on.
Okay, we're basically done the presentation now, Corey. We've got a couple of slides. We were updating our with our board of directors and our advisory team, and so I don't probably need to go into that. People know Quentin, who's our first chairman, now a geological advisor. He stepped down when he decided to focus his professional duties at Crescat Capital, who's one of our shareholders. So, and Eric Osoria, original mine owner, still a big partner of ours and shareholder of the company. And so, anyway, you can read this at your leisure, and we're happy to answer further questions on our team anytime. We think we've got a great team between our management, our directors, our advisory team. We've got a great team.
All right. And people can find all that information on the website as well. A couple questions that we should touch on. Number of questions have come in asking about Kerr drill results. Now, this is the other, I guess, project or group of projects that the company holds in Ontario. Do you have any quick updates for us on when we might see some drill results coming out of that Kerr silver project?
Yeah, you will see them very soon. It's definitely a front burner to get an update out on Kerr. We're very excited about that project as a sort of as a secondary earlier stage project for us for future growth. The reality is we've had so much happening at Bethania lately that has just taken priority. So that's really the message is Bethania's been delivering lots of, frankly, more important news between the resource estimate, the construction authorization, great surface results that we're getting there. So we've been very focused on that, but we will give an update on Kerr very shortly.
Okay. And a couple other questions have come in when it comes in regards to the resource as you have it now. There are a handful of metals inside this resource. There's silver, lead, zinc, gold, and copper. Are you guys seeing any deleterious elements or anything that would make processing this ore more difficult?
Processing it, no. Again, because we have that track record with the milling previously from the previous owners, we kind of know what to expect there. And really, our ore is very conventional silver, lead, zinc, ore. And so what we're going to do is we're going to produce 3 concentrates. The vast majority of the value is going to be in the silver lead concentrate, the vast majority of the tonnage and value. We will produce a zinc only concentrate, and then we'll produce a third concentrate that will have copper, gold, and silver in it. And that way we can basically maximize the recoveries of all 5 metals. That's our strategy for now, and obviously we can tweak it if we need to later. But we're very comfortable that we can get really good recoveries that way. Focusing on the silver, of course, and getting the maximum recovery on the silver. And the concentrate market, it's sort of a complicated thing, but we know that our concentrate is very desirable because this concentrate was on the market up until 2016, and what we are producing shouldn't be that different.
Okay. David, we're going to wrap it up here. We still have a few more questions, but you know what? We're going to save those for some future interviews. I'm going to bring you on my show over at the KE Report. We're going to break down some of the recent news as well as address some of these other questions. But thank you for taking the time, walking us through this presentation and answering most of the questions that have come in. If anybody has follow-up questions after watching the replay of this webinar, you can email me, fleck@kereport.com, and I will also bring those up with David. You can also see some of the contact information for the company there and where to follow them on social media. David, thank you for the time today. We appreciate the update.
Thanks, Corey. Thanks, everyone who's watching today. Really appreciate it and look forward to following up.